traders, Greg here with the market update. Okay, so the big news overnight actually came from South Korea. We saw the president of South Korea last night declare an emergency martial law. Now, the reason that he did that, he said, was to fight against pro-North Korean and anti-state forces. So look, this was a complete surprise. It's the first time that South Korea has actually declared martial law since 1980. So look, the market did react initially. We saw, as you normally see when you see political instability in the world, you see a flight to safety. So the market did buy bonds initially. So we did see bond yields lower. US 10-year yields went about 6 basis points lower. And also dollar yen reacted on the back of the lower bond yields, and we saw dollar yen lose a big figure and actually make a new daily low and broke below 149. However, look, it was all over in the space of 3 hours, so we did see those moves reverse. So, dollar yen did close back above 149, around 149.50, and those US bond yields also reversed those losses. Okay, now speaking of dollar yen, it is worth talking about. Dollar yen in the last 2 weeks has lost, a whopping, 600 plus points. So we've gone from, 156 highs a couple of weeks ago, and as we were just talking about, broke, 149 last night. So look, there's a couple of reasons why this is happening. The first one is that we have seen a reversal in that huge rally that we saw in US bond yields, US 2-year yields and US 10-year yields in the last month and a half or so. Went up 100 basis points, 1%, and we have seen a reversal in those yields. So US 10-year yields have gone from highs of 4.5% to trading where they are now around about 4.2. So they've lost about 30 basis points in the last couple of weeks. The yen is the most sensitive currency to bond yields, just because the Bank of Japan still has a policy rate of 0.25%. So dollar yen has followed, those bond yields lower. The second thing that the reason why dollar yen has traded a lot lower is because the market now is expecting the Bank of Japan to raise rates. So the next Bank of Japan meeting is a couple of weeks away. It's on December the 19th. And the reason the market's expecting that is because now that we're starting to see inflation sustained above 2%. We saw last Friday, we saw Tokyo CPI that came out well above expectations. They expected about 1.8%. They came out higher, around 2.6%. And we've also got the government in Japan embarking on some big fiscal stimulus of about 100 billion yen, which certainly will also fuel inflation. So the thing to note as well is that there is a Fed meeting the day before the BOJ meets on the 18th of December. The market is expecting the Fed still on the balance of probabilities that the Fed will cut by 25 basis points. So in the space of 2 days, we could potentially see the Fed cut by 25 basis points and the Bank of Japan raise by 25 basis points. The last time we saw that happen this year was mid-year, and that's when we saw the huge dollar yen carry trade unwind, when dollar yen got smashed lower from those 160 40-year highs for dollar yen, 2,000 points lower in a very short space of time, down to 140. So look, the market is certainly getting a little bit concerned. They don't want to see a repeat of what happened mid-year with the yen carry trade unwind. So certainly a lot of traders are taking risk off the table, being long dollar yen. So look, I would suggest that going into that Bank of Japan meeting, that at the moment the market is trading-wise selling rallies on dollar yen. Buying dips is certainly not the preferred strategy at the moment. On Friday we do have some wages data that comes out of Japan. If that does come out stronger, no doubt the chorus for that rate hike for the Bank of Japan will get louder, and you will see dollar yen trading lower. The other big news in the currency space actually is dollar China, dollar CNH. Since Trump was elected, that has gone up exponentially in a straight line on the back of obviously that Trump is going to impose the biggest tariffs on China. He's talking about 60% tariffs. China's economy at the moment is not in the best shape. The only tool really that they have to fight against the tariffs is to depreciate their currency. So at the moment, yesterday we saw dollar CNH trade multi-year highs above 130. The record highs are sitting not far away around that 135, 137 level. And I'd suggest that if market moved up and got above those levels, it's going to create some problems, just because that US dollar strength will feed into the broader Asian currency space. And at the moment, we are seeing, even take the Aussie dollar for example, is tracking moves in dollar CNH and dollar China quite closely. Aussie generally rallies with risk rallying. We've got risk at record highs, but yesterday with dollar China going above 130, we saw the Aussie capped and trading softer for most of the session. So definitely keep an eye out for dollar China, dollar CNH, especially trading above 130. Definitely can create some problems. Okay, tonight we do have something important happening. We do have Fed Powell speaking. As we mentioned already, there is the last Fed meeting of the year on the 18th of December in a couple of weeks' time. Fed Fund futures have got around 60-70% chance that the Fed will cut again by 25 basis points, but it's not 100% certainty. So the market will be looking for clues from Powell to see whether or not he's comfortable with cutting again just before Christmas, or whether or not he's starting to think about pausing. But I would suggest that we do have some very important data coming out. Non-farm payrolls Friday. Next Wednesday we've got US CPI. So I don't think that he's going to give a lot away until he sees that data before making a decision. Anyway, hope you have a good day's trading, and we'll check back in with you shortly.